Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, February 7th, 2022. It is 11:35 Eastern Time as I'm starting the video. I had some things I had to take care of this morning, but I'm back at my desk now, so I'm going to do an update here, and we're going to go through the charts, and we'll try to do it in this order. I'm going to do a brief update on the equity markets. We'll look at the S&P 500, NASDAQ 100, and the Russell 2000 small caps. Then I want to do an update on the precious metals, gold, silver, maybe hit on the euro and the dollar real quick there, Treasury bonds, Bitcoin, and then a couple of commodities I want to look at, give you some new setups in both cocoa and live cattle, LE. Those are futures. All right, starting out with this chart, this is a 60-minute, nope, not actually a 120-minute chart. Every candlestick is 2 hours. And this is just to recap what happened last week. We had just a golden shorting up at that 50% retracement, Fibonacci retracement on NQ and QQQ at the same time that the S&P 500 made a perfect, 61.8% retracement, and I'm referring to the move off the all-time highs in both of those. So that's it. So far, so good. We had last week, we pulled back. We had that little area of consolidation recently, which we broke above and was a catalyst for that thrust up there. And so that's what we came and hit. So we need to take that out now. Roughly about 424 on NQ, and you'll see a comparable level on QQQ if you're looking at that. So that's where we're at, and still looking for more downside. So we need to take that out, and then obviously take out the recent lows, and that should be the catalyst for the next leg down. On the bullish side, bulls want to see that level, those highs from last week, that 50% fib taken out, and then above that, they still have plenty of work to do to the upside, the buyers that is, because you have some significant resistance here at about the 61.8% fib on NASDAQ 100. That's this whole area right here of sideways trading. That was so far a topping pattern there. And remember, that was the breakout and back test of this previous all-time high in the NASDAQ 100. So we broke out here, back tested it a few times, and then failed. So that was makes this whole thing a failed breakout, aka bull trap. And based on that and many other things I've covered recently, I think we'll have another leg down. Let's look at real quick ES, and I just want to zoom out then to the bigger picture. This is the 120-minute chart of ES, the S&P 500 E-mini futures. Same thing. There was our tag in the 61.8% fib last week. There's that area of recent consolidation, which we could see we just back tested right here. And just like QQQ or NQ, you need to take that out. And then take out the recent lows. The big number is about 42.58 or so on ES, the S&P 500 E-mini futures. And I think we'll do it. Again, from my experience, this isn't just one of many factors, but typically you can get when you have these big corrections, and keep in mind this was one of the biggest in a while, especially in the NASDAQ 100. Typically, not always, but they usually end with bullish divergence, at least on the 60-minute chart. We don't have that. We did not have that. That was a low there, and we never made a lower or equal low, so you didn't have divergence. And again, that's just one of many things, but more so is the big picture. Let me just loop over to that, and then I'll cover the small caps as well. This is the big picture. This is the NASDAQ 100 weekly chart via, nope, that's daily. Let me see. No, I'm on the weekly here. Now I am. There it is. That's the weekly chart right there. And this is the big picture here. You have T1 that was recently hit. There's our initial leg down. Boom, little flagging action going on right now, still on the weekly. You can see it there with an impulsive move down, a little area of a bounce that takes the shape of a bear flag, and then that should if we can move down, and it's hard to really time these things. Again, that maybe the flag plays out as such, maybe not. But if it does, and the way the charts look to me, it should happen soon. I think we've had enough consolidation here. Again, the break of the recent lows and/or which will also be my first target. Oh, should open the door for a move down to the next target there on the weekly at about 299. But I did want to show you something on the daily chart right here. Let me go to a cleaner board for you. Well, what I can do, let me turn off all these annotations and just pay attention to, I want to just focus on something down here. The daily chart, you can see we recently became oversold. That's when the first target was hit. And in a deeper correction, this was just a pullback right there. We did hit oversold. But back here, let's just examine that big drop when COVID hit back in February 2020. And you had, I'm going to put the crosshairs down on the first oversold reading right there. And that was when we got our first counter trend bounce. I made the compared this recent drop to this one, and they were almost identical in both percentage of the retracement. Well, a lot of similarities. The initial leg down, again, compared to the initial leg down we just had, the counter trend bounce, both in percentage terms and in Fibonacci retracements. And then, so what happens? You get oversold, and the buyers, they step in and buy, and that's usually the case. You can only go down so much so fast. Then you get a counter trend bounce. You hit the 200-day moving averages there, but then, as you can see, after the counter trend bounce, you came down, and you became oversold again. That happened right here as well. You had this correction there. There was an initial leg down, right? Oversold right there on the button. Right here on the RSI, and then you had a counter trend bounce, and then another leg down also to a little bit deeper oversold level there. Remember the big drop back in the fourth quarter 2018 right there? That's where you first became oversold on the initial drop, right? You had a counter trend rally, which again I compared these counter trend bounces. You hit it again oversold, and then once again oversold. So again, that's where you'll usually bounce, and that's what happened so far. So we've had the bounce, and I think the door is open for the next leg down if we're going to get it, and I still lean that way. So that's bigger picture stuff. And then last but not least, I said I'd bring up the small caps, and they're playing out as expected as well. You had the recent almost it was a year-long consolidation range right there in that box, and numerous tests. This was super well defined, that support there at about 208.50. We broke down below it, and we're still well below it. So, at best case scenario, best case scenario for the bulls would just be to keep going up and make new highs, but there's still a mountain of overhead resistance. That's a big level, just as it was very important support. And once it broke, as expected, we didn't just meander around. We went down and hit that 191 for support right there, bounced. And so it'll be interesting. You had a little bit of divergence only on the RSI, but not the PPO. And again, the same story here. I think we're going lower, but we need to take out those recent lows. But again, the case was made for objective short entries last week, and that would just be an objective add-on or new short entry. Or let's just say you didn't take the shorts last week, but you want to get short. You could wait for a break of the recent lows, or even those first levels I showed you, the break of the where we bounced just last week. Or recently on the top of the consolidation ranges. All right, let's move on to gold and silver. Still like the precious metals, and I still favor silver. I have a preference and have recently for silver over gold. But bigger picture is this. That one's messy. You can look at the weekly chart. And this is what I'm watching, the big old triangle pattern right there, and want to see and expecting, but we'll see if when it happens, it'll increase the odds that we're going to go up, and that would be a breakout above the triangle and about the 174. There's some price resistance there on GLD that should take us up to, and I believe ultimately above the previous highs from the bull market that we're in, those highs that were put in back there in 2020. And SLV is the ETF for silver if you are an ETF trader. And of course, you have the miners. Remember, unless there are a few instances I've seen where we've been in very strong bear markets or big corrections, and the miners get sold down with the market because they are stocks while gold and silver are rallying. But for the most part, to be bullish on gold and silver is to be bullish on the miners, and I think that's the case right now. There's our nice support right there. This is a big support zone in silver, and you have a downtrend line right there. So silver needs to break above that. If gold breaks out and the triangle, I believe, well, almost certainly silver will follow ultimately, and it may even lead the way. Here's GC Gold Futures, a big level. You don't even see all the reactions because they're to the left of the chart here. I'm on a 2-hour time frame, 2-hour candles, that is, 6 months of price action. This to me is still a big level, about 18. It's 1855 now in the futures. Over time, that number has changed because the futures over time, roll. But we had that one little false breakout there, and it also occurred with a bearish rising wedge pattern on the breakout. But other than that, there were plenty of reactions. And again, that's I think a big level, and that should also coincide with a breakout above the triangle I just showed you on GLD. And then silver really looks nice. This is again a 2-hour period chart, 6 months, 2-hour candles. Recently put in this divergent low right here, and then went on to take out the downtrend line. So there was a breakout of bullish falling wedge. Silver's running up. You can see some marked levels here, but I think the next significant resistance level is going to be up there in near-term target, about 23.45 right there. Big support down here. Both times we hit that level, we had positive, aka bullish divergence. And this time again, we've just had the first divergence in a while here on this 2-hour candlestick chart. And so that's it. So silver near term looks good. Just broke out recently and moving. Nice gain of about 2% so far today in silver futures. And Bitcoin, this is GBTC Bitcoin Trust. As highlighted recently, we had a major, big old reaction right there, and a major reaction low right there, another reaction low there, and we recently came down, had an intraday break, but to close back above it, multiple tests, and we've been moving up. Took out that trend line, have now popped that potential. Not crazy about that second trend line because it only had a couple reactions on it, and we're through it today, so not really a reaction there. But there's still quite a bit of resistance overhead. And again, I give it coin toss odds whether this breakout sticks and we get a lasting rally. But I'm kind of leaning towards one more thrust down, maybe put in a divergent low, shake out the last of the weak hands if we're going to get a lasting bottom in Bitcoin. Again, kind of mixed thoughts, and my convictions aren't really high right now. On the 6-month chart, 2-hour candles, Bitcoin futures, BRR symbol, no divergence. We didn't have bullish divergence, but we did break out of that downtrend line, and we have support there at about 40, almost 4100 right there, resistance that was taken out. We're at resistance now, so I'm giving you levels where we could, if this rally is going to get checked with one more leg down, which I'm leaning towards, 43,610. And then even bigger resistance, about 45,658. You can see these reactions right there, and even some back here as well. That again, 2-hour candles. If we want to look at it on a yearly, let's go to 18 months. That should do daily chart, I mean. Okay, this is the daily chart. So see, there's that level where I'd be more comfortable in putting on a pretty good position in Bitcoin if we hit. That's about 30,361 on futures, BRR again. And then there's a downtrend line that was taken out. So we may never get there because the downtrend line we broke out. And you do have resistance just above, a little bit overhead at roughly 44,700 right there on Bitcoin futures. And so obviously if we take that out, then my next on the daily chart, my next resistance is 52,793 right there. It's a good level. And then ultimately 6309. So as of now, I think we'll probably get this. I'd like to see that at least. And to draw it out again, that's a scenario where we'd have a that's proved to be a false breakout, so the reversal would probably be pretty swift, and then come on in here like that and put in a divergent low if it happens anytime soon, because your indicators would go down but probably not take out those previous lows, and then you'd hit major support. So if I could see Bitcoin futures at major support with positive divergence, we're taking a shot with a stop somewhat below for a trend or position, longer term swing trade. Okay, next up, CC. This is a short. It's an actionable short, in my opinion. I'll usually share trades. I'll try to specify if it's a trade setup, meaning waiting an objective entry, or actionable at the time. This one, I believe, is actionable. CC, this is Cocoa Futures. I'll get to the ETN in a second. That's NIB if you prefer to trade ETNs over futures. But what stands out to me, this is a hourly chart, so 1 hour candles, 3 months of price history, and pretty simple stuff. There's a big part, not all, but a big part of my trading style is I look for divergent highs and divergent lows. Divergent highs are bearish, and divergent lows are bullish. This is a divergent low right there, divergent high. You can see them all marked. And wash, rinse, repeat. Now, obviously, you want to line a divergence in itself is not a buy or a sell signal, but when it comes in and you get a nice clean uptrend line or downtrend line in which to trigger an entry. So this is it. I'm going to just go off all the divergent highs. Divergent high, divergent low, divergent high, nothing there. But we had a setup. There was a downtrend line right there in which to trigger a long entry. We also have price support down here. That was a divergent high right here. And there was a correction. There was a divergent low. Was this rally? There's nothing 100% in trading or investing, but some securities just trade very well to these technicals like this. So, bottom line is you had a nice, clean, bearish rising wedge with your divergent high, and we just broke down. We had a little snapback rally to test that previous high. And so far, an impulsive rejection. If you want to play it safe, maybe just wait for a break of the recent lows. We're almost there now as I'm doing the video. And then the target's 20. That's about 2,600, and that's an old level there. I'd have to. Yeah, no, I'm leaving it there. I still like that one. Next one, second target, 2573, because you had a couple reaction highs back there, and you can kind of get a feel for the magnitude of these moves that come after the divergent highs and divergent lows. So minimum probably come on down here, somewhere around there. Maybe you want to throw in some Fibonacci levels. Or sometimes what I like to do is just, if you get a good entry, set your stops and then trail them down and let the trade run. Give it a little room to run. And sometimes you can milk it all the way down till you get a divergent low. So as of now, I think it's a short. Targets are give you some near-term targets, or just let it run and look for a move comparable to these previous moves there. That's CC, and I told you I'd give you the futures, which is NIB. Let's look at that. Longer term, I remain bullish, and I've laid out multiple entries on this all the way from back here. And this is a trend line that's just acted real well here. You can see it there better. And each and every time we've hit that trend line, since it started to form, starting back here, I pointed it out, including this one as an objective long entry. But here's where we're at now. Oh, kind of on the daily chart. Bigger picture is there's this. Let me go back to this one here. You have bigger picture, and I know it's so many annotations on here, but you have this triangle pattern as well there. So right now, I think it's like I said, near-term short. I don't have levels marked up for you on the 60-minute or daily chart. Just like I said, if you're going to take this one, just maybe trail your stops down and let it run for a little while. At the very least, if you can get a pullback to this trend line again, I would certainly cover a short there and even consider reversing long, especially if the 60-minute charts confirm at the time. And next up, this is LE, live cattle futures. And what you can note down here, a couple things to note. I have up top is the RSI. And there's a level right about here. It's about 73 that tends to do the trick. What I mean by that, tends to cap rallies right there. That's what happened when you got there. You hit it right there and you had a correction. You hit it again here and you had another correction. It was the first correction, second correction. You hit it there, another correction that really didn't end until we were all the way down here. And then you hit it again there, right? Simple stuff, right? These are what I look for. I look for similarities, patterns, and things that have happened in the past. That's what technical analysis is all about. And so there are no guarantees, but look, we just hit that level there, again, about 73 on the RSI. And we also just took out a trend line. All the better when, it's one thing I don't, like I say, I don't short divergence just because there's divergence, and I don't short overbought just because something's overbought. Why? Because sometimes if you wait till, let's say, that 73 level is hit, you went short right here, you got smoked, and you probably got stopped out. So I always say overbought and divergences are not sell signals, but what are especially when you have those conditions. They're just conditions. And when you have those conditions, and then you can align it with, say, a trend line break like that, a nice clean up trend line, just like you had there. You had a steep one there. Right there was a trend line break, and recently here was a trend line break. So, and coupled with the overbought reading, and down here on the very bottom, you can see my PPO. Pretty simple stuff. I look for high level bearish PPO crossovers. There's one here, right there as well. It's not marked, but there was a correction there. There was a high level bearish PPO crossover. There was one right here, and we had a bearish PPO crossover there. It wasn't as high. This one's really high, and those big ones like that, usually like this one and that one, they usually lead to pretty good drops. So price targets, I would say, let me give you a level here. I'd say initial, cancel that. Initial target coming in somewhere, minimum target, I'd say around there, that reaction high. But I think we could probably get more than that based on everything I just went over. So another one you might just want to let it run with some trailing stops in place if you're going to take it. That PPO, that bearish PPO crossover hasn't happened yet, but it appears to be imminent. When you usually get high level like this, you're going to get a cross, even if the lines bounce. Again, I think this one's ripe to drop from here. There is also, that's live cattle. Let me look at lean hogs for you real quick. Okay, here's lean hogs. They often, not always, but often tend to move in somewhat in concert. There's one more trend line I should add right there. So, and that was also a divergent high back there. So here's where we're at. You have negative divergence right now, right? Just like you did back here, just like you did there. You also have a high level bearish PPO crossover. There's your PPO cross, actually pending. It hasn't happened yet. And once you get it, it'll confirm that divergence. That divergence is also unconfirmed because the PPO is moving up right now and could continue up. It's a momentum indicator. So if we can get that rollover, it looks to me likely, very likely and imminent. So on this one, you could even take a shot now with the stop somewhat above or wait for the bearish PPO crossover and then a trend line break. That'll be your sell signal there. So you could call that one a setup if you want to, or an aggressive trade if you want to anticipate the what the charts are indicating is likely to happen. And this one, yep, I would put I would certainly say there's some support around here. There's a gap and those reactions right there. And then max right now, if you're just swinging this one down, I would say right here. Remember, commodities are still in a bull market, but that's really nice support right there. So I'd say that's my final target at this point in time. 91, 624, cover a little bit above that actual support level. And for those of you that don't trade futures, I know those some people don't have a futures account. Cow kills two birds with one stone. It's the livestock ETN that has both live cattle and lean hogs in it, so combined. So that's it. It buys the futures for you. There was a major reaction low there. We tested it there for about a week and then broke it. And so that's a pretty big level. That's about 40.62. So the story of cow is it's coming up to a pretty significant resistance where at least a reaction or minor pullback is likely. There's a little uptrend line there, comparable one I gave you on the futures. And you just want to line this chart with the futures of cattle and hogs. If you don't have a futures account, you can get those free from investing.com. That's a great source. I think TradingView also has them. And a lot of your brokers, like if you have Ameritrade's Thinkorswim platform, they'll give you futures charts. You can use that as well. And one other trade idea, looks like Treasury bonds are likely to pop soon. Been building some divergences. I might have highlighted that last week. You had a downtrend line there, and we broke out, and we're just back to this. And there's a marginal new low right now, but it only extends the previous divergence. Like we had divergence back here, and that led to this rally up to that point there, which ended, you got it, with negative divergence. So there's positive divergence on the, this is the 2-hour time frame, 6-month, 2-hour candles on ZB, which is your 30-year Treasury bond. You could trade TLT in lieu of that. And I like to see it on the 10-year as well. It helps to align that. And that would be ZN, which I'm going to queue up here in just a second as soon as I find the chart. There it is, ZN. And same story. You have the divergence that's been building, bullish, aka positive divergence. Each little divergent low gave you a little pop, but so far, well, you know what? We're slightly lower on the PPO there. So technically speaking, we've taken out the PPO divergence. Close, but so you don't really want to see much more of a drop, or those divergences are going to clearly be burned through. So just throwing out something, not one of my favorites, but I think if the markets can get that other leg down this week, you'll probably see money come into treasuries as a flight to safety bid. But it can go the other way. If we hold up and the markets happen to rally this week, and treasury bonds, it's certainly not going to help them. Doesn't mean they can't rally, but you tend to see stocks and bonds, especially during periods of volatility, move inversely. And that is, again, it's the safe money, flight to safety trade. When the markets, are coming under pressure, the stock market, that's when institutions usually flock into treasury bonds, and vice versa. If they think it's safe to get back in the water, meaning the stock market, they'll sell their treasuries and go back into stocks. Okay, let's wrap it up here. Keep this one somewhat short. This has been Randy Finney with Right Side of the Chart. Have a great day.